Hello, I'm Anne-Margaret Crowe, Director TMT Industrials at Edison Group, and it's my privilege today to be speaking with Professor Lutz, who's Chief Executive Officer of BayWa Group. BayWa's headquartered and listed in Germany with an international reach, and it operates through three key business units which serve the energy, agriculture and building materials markets. So welcome, Professor, and thank you very much for taking the time to speak with us today.
It's my privilege as well, and I really appreciate your time. Thank you.
Thank you. So my first question is about the results for the year ended December 2021, where BayWa reported record operating profits. Please give us a bit more detail about those results.
First of all, the 21 results is the third record high in the short time history of BayWa to be the best performance ever. And 21 is exceptional due to the Corona crisis and the pandemic situation and all the negative impacts we had, of course, so that the cost structure is loaded with some one-timers regarding all the prevention activities we had to take to protect our customers and employees and all the stakeholders, which is really a lot of money, a significant amount of money. I guess it was around about 20 million euros cost due to the coronavirus situation. Nevertheless, we provide to you, to the capital market, a record performance because more or less all business units and business segments contributed to this super result, much better than in 20. And in 20 we had already a record high and the burden of the coronavirus. And so far the operational performance over the last year is, if I might say it in English this way, is some kind of harvest of the initiatives and the innovation and investments we made over the last 14 years, and especially the internationalization, which was one of our most important strategic goals as of 2009. And I think it's worthwhile to be mentioned that, for instance, our international grain trading and commodity trading activity, which is becoming more and more specialty-oriented business unit, that's Cefetra, managed in Rotterdam. It's a global business, has an upside of nearly 80% in comparison to 2020. Our building material, which is becoming also more specialized business as just a general supplier and provider of building materials, has an increase of 56%, and the renewable energy as the last years an upside of 21%, which we are used to already, so to say. And it's interesting that the business sector agriculture in Germany and Austria and some Eastern European countries has again a positive contribution because the years before we saw a loss situation. Now we had a turnaround and we are very grateful for that because the situation due to the new gap policy of the European Union, the uncertainty in the agribusiness, the uncertainty among the farmers in Middle Central Europe. Nevertheless, although we have these problems or these uncertainties, the performance was very good, especially our grain trading and supply chain management was very successful. And the key for investors or potential investors is that earnings per share had an increase more than 100% from 0.66 to 1.63. And the dividend we are going to pay, of course, on the basis of the decision which has to be taken by the AGM, On the 24th, I guess 24th of May, we propose €1.05, and so far I'm very happy with the development in 21. And we had some one-timers, for instance, a problem in renewable energy in Texas due to the weather situation over there, and some other impairments and write-offs. So with other words, we protected already the balance sheet and the P&L statement for 22 due to some actions and decisions we had to take, or we have taken. And 22, the expectation is also from this point of view, or from this point of timing, so to say, is very positive, because we expect a very good first quarter and first half year. Nevertheless, there are big question marks regarding this awful war in Ukraine.
Just adding to your remarks about the renewable energies division, because that has been a key element of your strategy over the last decade. Is there anything more that you'd like to add about perhaps the relative size of the renewable energy result in the mix?
Maybe first a statement to the long-term strategy. Over the last 14 years, we always stick to the strategy we defined in 2008, 2009. Well, of course, it's a revolving process, and you have to adapt and you have to change some aspects. But the in principle strategy, we did not change. And as you correctly said, the renewable energy business, which is built, owned, operated, and transfer business for the development of projects of wind and solar plants, one side, the other side, the solar module trading activity, energy trading, and the service business. This was the fundamental strategy we agreed upon many years ago, and year by year, the contribution to this record result, but also for the last 5, 6, 7, 8 years, it was really significant for the group that this strategy has come true, and has come true especially successfully, of course. And I would say in relation to the overall profitability, or the EBIT, we had 266.6 million euros real EBIT, without any, let me say, tricky calculations or so. That it's the real result. More than 50% is coming from renewable energy, and so far this is really a great performance, but also significant contribution, and has to do with the future perspective of BayWa, and this is based mainly on the development of our renewable energy business. So this strategy, as we started the implementation 11 years ago, more or less 11 years ago, was financed by ourselves, and now we have a co-investor. It's called EIP, Energy Infrastructure Partners in Switzerland, formerly known as Credit Suisse Infrastructure Partner, and they took 49% for 530 million through a capital increase decision we have taken. And so to say, we are financially on the safe side of life, more or less. And with this money, plus some 500 million green bond, and also the financial power of BayWa for the perspective over the next years, RE is becoming much more important. And the outlook is that over the next years till 25, we expect an overall EBIT in the group of around about 450 million euros, and the key support comes from renewable energy. And there's one change in the long-term strategy of BayWa, our EAG, which is now really a separate legal entity, like a stock-listed company. And the key change is that we are going to prepare more and more the IPP strategy. So we take wind and solar plants on the balance sheet, And we use that as a steady cash flow operation, and of course also a steady profit distribution to the overall performance of BayWa. That's the change due to the investment from EIP in BayWa RE. And the importance of renewable energy is becoming higher and more important as it was in the past. And maybe you know that I will stay as chairman of the supervisory board of BayWa RE AG also in the future, even stepping down as CEO of the group.
You have already touched on this, but if you could tell us a little bit more about how you expect performance in 2022 to compare with 2020-21. I know you don't provide explicit guidance, but you have given some indication of how you expect the 2 years to compare. Thank you.
Yeah, that's my pleasure. Well, the management's expectation for 22 is that, let me say, on a going concern basis, this is important, of course, due to this war situation in Ukraine, we believe that we have a chance to significantly increase the profitability in 22 in comparison to 21. And the reason for that is that, first of all, we had some postponements from renewable energy. 2-3 big wind and solar parks couldn't be sold, or we didn't want to sell. Sometimes it's our decision, and sometimes the process takes a little bit longer as we planned. So this we have to add. And it's really interesting that the trading and distribution activity with solar modules within RE, which is a separate entity in renewable energy, is facing a record high again, because the demand of the customers is extremely high in Europe, and we are market leader meanwhile in Europe. So this will be part of the very positive development in 22. The first quarter, we don't have yet the detailed figures, of course, and I'm not allowed to share that with you, of course, but I can describe it. The first quarter will be, the likelihood is extremely high, will be much better than last year. And the second quarter, we expect a positive development as well. The reason for that is RE, but also our commodity trading. And I hope it's not too sad, but to be honest, of course, due to the increase of commodity prices and our long position we had in the balance sheet, or the long, physically long position we have in our stock, will lead us to a very, very, very good first half year.
That's very helpful, thank you. And clearly, this potential result is very much informed by that strategy that you put in place. So, well, over a decade ago now. Yes, thank you. And finally, you have touched on this already, but you have set out a longer term plan through to 2025. So can you tell us about your goals, financial goals for 2025, and how that vision of yours that's summed up in sustainable solutions for life, how that vision will help BayWa reach that goal? Thank you.
Thank you. First of all, what are the goals? Of course, to improve the sustainability, to reduce CO2 output and all these things, you know. And so ESG will play a significant role in the future for more or less all companies. But due to the fact that we started very soon, and before, for instance, we had this decision to leave the nuclear power in Germany, and that we start the energy change strategy in Germany. We started already with renewable energy. And to be honest, one of the key stones or cornerstones for the 25 development or strategy for 25 and the increase of profitability up to 450, maybe it's 430 or maybe also 500. I can imagine. The basis for this sustainability and solution for life strategy is renewable energy, but also our global produce business to become much more organic, and the same in the classical agriculture business to become more organic, which is the yields are higher, and so to say the profitability is going to increase. And well, I think these are the key points for the 25 strategy. With other words, it is not a fundamental change, or it's not a correction, or we don't have to change fundamentally something. We just continue with that what we did. And I can tell you the KPIs for that. So we expect, as I said, an EBIT, real EBIT, not operational or adjusted or whatever, and real EBIT of 450 million. That's the one thing. The other thing is that the diversification and flexibility of our international activities will be bigger than 70%. With other words, the strategy we started for 10 years ago means that the BayWa AG, so the old, so to say, old business, the classical business, is either 30 or lower than 30% from the EBIT contribution. And we expect that ESG-oriented EBIT will be bigger than 50%. But here we have a little problem with sustainable finance regulation and the taxonomy of the European Union, because this is not profit and EBIT oriented, it's revenue oriented. And the question is, what is really ESG like and what is old business? And I'm criticizing very heavily all the time, also as president and chairman of the Chamber of Commerce here in Bavaria. I'm criticizing this ESG proposal of the European Union. Why? Because supply chain management, distribution, transportation, logistics, even if you transport, for instance, solar modules, is not included and is not to be financed on the normal ESG level, which is a scandal. Because what are you doing if you are not in the logistics and transportation business and you can't be competitive in relation or in comparison to international competitors due to this crazy nonsense and not acceptable definition of the European Union. We say we want to have more than 50% of our EBIT, which should be, so to say, green, which is nearly the case already. As I said, RE is more than 50%, but it's not all green under the definition of the taxonomy. And we fight for a change of this ESG regulation of the European Union. By the way, fundamentally, I completely disagree, because this is destroying market-oriented economy, which can't be in our interest. And the climate impact on our business in the future is that we would like to reduce the CO2 emissions minus 22% till 25. This is in the supply chain and distribution not easy, because you have diesel trucks and ships and vessels and so forth. But that's the goal.
Okay, well, thank you very much. Thank you for answering my questions in such detail. It's been great speaking with you today, and I look forward to catching up again soon.
Okay, thank you very much, Mrs. Crow. All the best. Stay healthy, please.
Thank you. You too.